Hi everybody, this is my May net worth update video where we break down what our net worth was for the month prior. So when we look at our net worth, we typically calculate it based on our home purchase price, all of our investments in retirement and savings, any real estate, and then subtract out our only liability of our mortgage. So we started to track it in two different ways just to show and kind of appease everybody since people do tend to do things differently. As I said, I track it and use those numbers based on our purchase price rather than our home value. Our home value has significantly gone up since we purchased our home. And just to kind of compare, even month over month, it has continued to rise. So it was like a $20,000 increase over last month just for our home purchase price. So for me, that I feel that significantly skews the numbers for us because we don't intend to pull any equity out of our home or sell our home to tap into that equity. So the numbers that we calculate, we want to be able to use to know that those numbers are more realistic numbers for what we will be able to live off of in retirement as a true asset or means of an income in the future. So getting into the numbers a little bit more, we did see an increase in our overall retirement and savings of about $4,000. Again, the market is still very unreliable, I guess, not consistently going up by any means. So that number has been a little bit all over the board. We do invest in the real estate platform called Fundrise, but we have not been contributing to that this year. That is not one of our current goals that we are working on, so there was really no change. I think we lost like $1. So not a big deal there. We were last year working more aggressively on paying down our mortgage because we want to be able to drop the PMI insurance, and we're very close to being able to do that, but we realized that our money was better spent towards investing rather than aggressively paying down that mortgage. So we are still on track to do that, and I was very tempted to make an additional payment because we are like $55 away from the next milestone and getting to check off a box on my grid. So we're getting there, and either way, by the end of the year, we will have met that goal and be able to drop that PMI insurance. So I'm not worried about it. It's just my, I don't know, aggressive tendencies to want to check boxes off, I guess. Okay, so when we look at all the numbers then, and we'll calculate the normal way we do it first, using our home purchase price. So when we take that, we add up our retirement and savings accounts, our real estate, and then we subtract out our mortgage balance. We come up with a net worth of $359,843. This is actually up over $5,000 from last month. And we also calculate our percent to financial independence. So we take that number, whatever that net worth number is, and divide it by 1.5 million, which is probably actually a pretty low number, but a safe estimate for a financial independence number. So we would be at 23.99% of the way there. Now, when we look at it the other way and use our home market value instead of the purchase price, and kind of following that same formula of adding everything, all of our assets up, and then subtracting out that mortgage, we end up with a net worth of $487,110. So as you can see, 487 versus 359 is a significant difference. And when you look at it on the graph as well, it's a huge difference. I will say one thing, even though I didn't go all the way back with the blue lines, it's encouraging to see that number continuing to increase, even though, again, it's due to our home values going up consistently and not really tied to anything else, because that red line is actually pretty flat. There's not much of an increase in that trend line, which is a little bit discouraging, but eventually when things do turn around, that will consistently start to go back up as the market kind of turns around. So I kind of like to do this just as a visual to help make sure that we are continuing to go up. But again, a lot of this is very dependent on the market, and that's something that is out of our control. So what is in our control is that we are consistently contributing to those accounts, both our employer-sponsored accounts, and the last couple of years now we're working on maxing out my Roth IRA. So we are consistently going to add to those investment accounts every single month, so that when that market does turn around, those numbers will, the money is there and we're buying those shares, so we should see a nice return on those at some point. So that's going to do it for me. I will be back again next month with another monthly update. Otherwise, follow along for my weekly Transfer Tuesday updates, and I will be sharing a little bit more in the coming weeks about how our transition to going to weekly pay from my employer is kind of shaking out. So I hope you have a great month.